Welcome to Real Estate Investing Abundance, the show for busy, fulfilled professionals like you to learn how to develop financial independence built on solid, passive real estate investments. Now, here is your host, Dr. Alan Lomax.
Enlightened investors, delighted to be back with you again today. I'm your host, Dr. Allen. If you're tuning in for the first time, I hope you find value in the show and that you head on over to stevetalker.com and enroll in our Enlightened Investor Circle, where you'll receive support for your investing goals, no matter what your level of expertise and experience. Today, let's explore how we can get into real estate deals with our guest as we take a look at networks, partners, and how to structure a deal in any asset class. Welcome to the show, Oscar Buendia.
Hi, how you doing, Alan? Thank you so much for having me. I really appreciate it.
Glad to have you with us. Before we get into structuring deals, tell us, Oscar, about a memorable experience from your formative years that helped you to be the person you are today.
I can't, it's so hard to say just one. It really is, because throughout my whole life, I think it's just seeing my parents work so hard. I said in my bio, I came here when I was 4 from Colombia. I think one of the things that stuck with me so much was their hard work and how much they sacrifice for me, that it's almost like I have to overcompensate and work hard to show and to give back that I am grateful for everything they've given me by bringing us to America, which is why I ended up joining the military and everything, because I love America so much. And that changed me so much. I strive to always provide value and be better every day. So yeah.
Well, Oscar, we are glad to have you with us today, and we're going to depart from our regular platform, and Oscar has for us a presentation on partners and networks and structuring deals. So, Oscar, I'm going to turn the screen over to you and let you roll with it.
Just a little bit about who we are, and I do this with my brother. We've been investing for about 7-8 years now. I used to do it mainly with my wife on my own, but really it was around 2019 that we scaled in one bulk purchase 20 units, and it comprises of small multi-unit residential properties. But we bought this portfolio and it completely changed our life. And we started looking into syndication, creating funds, that part of investing that I was never exposed to growing up. And really, I think if any of your listeners don't know about it or know about it, know that world is something amazing, where investments, where the wealthy are really making their money and their returns. Yeah, we scaled to that point where my brother's a Marine Corps vet. I'm an Air Force vet. We were raised in New Jersey. We started our own company, 2 companies, one REI Brothers, which is for marketing and education, has a podcast as well. And then we created Good Day Capital to acquire more assets as we're finishing up our refinance now, to do syndications and funds. And then that's a little bit about us. I have a beautiful wife and a 3rd kid on the way. Really enjoying this stage of my life. So why invest in real estate? So the biggest thing is cash flow appreciation, real true force appreciation on the commercial side. Everything's based on NOI as opposed to market comps. That's one of the biggest lessons I've learned recently, is commercial has so much more upside than residential, and you can truly control it. 1031 exchange, deferring taxes until death, and then null and void, right? You can't do that with any other asset class. You can't do that with stocks. I think you can't. I was thinking life insurance, but the only thing, but you can't. Tax depreciation, 27.5 years, and you do cost segregation in commercial and do that in 5 years. If someone's not paying if you see someone's tax returns and it's zero, it might be because they're a real estate professional and they have depreciated so much in taxes that it offsets their taxable income all the way down to zero. I don't know any other profession you can do that. So wide range of strategies you can choose from, all the way from fix and flip to all the way to creating a fund or being the bank and providing the notes for people to take down assets. And generational wealth, this is, I think, for me, is the biggest generational wealth maker, where people are truly making their money, that the wealthy, that's how they do it. And then to make it truly passive, it takes work. It's not just going to be passive from day one. That's a misconception I always like to throw up. Just a little bit overview, because I think your audience is a little bit more advanced if they're looking at your company and your show. Residential, what is truly classified as 1 through 4 units, commercial, different types that are out there, self-storage, industrial, land, all have their advantages and disadvantages, but overall, multifamily specifically and industrial have very strong base because and usually are recession resilient. The last to get hit in a recession just because they are basic necessities. Everyone needs a roof in multifamily, and industrial is what keeps our country going, right? Everything from factories to warehouses. So I go a little bit into pros and cons, but I'll move it forward because I think everyone understands these a little bit in your audience. And I mentioned the pros in the beginning. Just overall, which is better? That's always determined on the individual, because I believe the risk tolerance is different. If you're someone that wants to be more hands-on and on a visual scale, keep it smaller and everything closer, residential investing might be for you, right? Like buying a duplex, triplex, fourplex might be what's better. But if you want to scale, if you want to really take advantage of financing, non-recourse loans, which I think is unbelievable. I think you can get a loan and be against an LLC or a company and not against an individual. If you want it to appreciate based on the NOI, which is how a business is valued, then commercial might be for you. But it all depends on that risk tolerance, and commercial has to be a team sport. It really does. You can't take something down big that is not involve several parties, several partners, sponsors, investors. Everyone has a role that they play. So putting it all together, these are normally the things I talk about in a larger class about the valuation, the network, the partnerships, how to structure it, how you yourself can get into that deal, no matter what job or profession you may have. And I made a little diagram, and I'll dive into it, of how visually showing you that, and then maximizing your skills to know where you fit in the puzzle, right? Figuring out your asset class, your acquisition strategy, and how to get it funded to make it happen. If you figure those three things out, you have infinite possibilities to take a deal down. But again, it's all about exposure. You have to increase your network to find the right people for all these things. And I'll dive into a little case study of someone that brought us a deal, because we're at the point where our network has grown enough where we can bring it to high net worth people to see if they could sponsor. We can bring it to lenders. We can connect the pieces that someone might be missing. So just keeping these in mind, I like to make sure people understand that, cash flow gets you out of your job. Equity keeps you out of one. What I said in the beginning, real estate, it takes work. Nothing's passive unless you put the work in it. Your network is your net worth. And just being humble, hungry, and smart. Humble enough to ask questions, do the dirty work, hungry to go after something and seek it.
We'll be right back after a word from our sponsor.
Would you ever invest all your money in a single stock? Very unlikely. Yet investors are willing to risk $50,000 to $100,000 in a single property in real estate all the time. Avestor is the world's first customizable real estate investment platform. Investors can build their own custom portfolios, selecting investments across multiple asset classes such as single-family homes, multifamily, student housing, self-storage, and shopping centers. You can also invest across multiple markets and different time frames. Avestor also enables other real estate entrepreneurs and syndicators to build and use Avestor's infrastructure and cloud platform to create their own customizable real estate funds. To learn more, visit us at avestorinc.com. Avestor, real estate investing made simple.
And smart enough to problem solve. So the wheel of access. So this I created because in my W-2 job, like many of your listeners, what I've done is cyber warfare. And this is something that we call the wheel of access, which is how do you get into a system? How do you get into something, right? You can make this for just about anything, right? So I started really looking at real estate from a point of view that way of how do I break into a deal? What creative ways can I do this? And I've been able to have amazing mentors who have acquired thousands of units. And as I learned from them, I realized that it's not just a transactional piece to the house. It's not just the ownership piece of the house, but it's truly, there's so many ways. And there's two ways really that you get paid in real estate. And one is equity and the other one is the cash flow. If you're on the asset management side, you're going to most likely be getting paid from the cash flow, the cash flow portion of a deal. And that's how that asset is going to pay for property management, for contracting, you name it. Now, if it's coming out of your own pocket, that's a different story. You probably need to look at your operations because the business should be self-sufficient, right? It should come out of the cash flow. Same thing with the funding, right? It's you're either paying some origination fees that are being rolled into the equity, or you're paying the cash flows, paying off the mortgage, blah, blah, blah. That's how it normally works. Same thing. Ownership gets a piece of both. If you're transactional, when you go and do a refi or when you go and close, everyone's going to be getting paid off of a piece of the pie of that equity. It's just the way it is. Looking at all this, started really looking at who can fit into these pies. And you have a transaction side. Normally we think, okay, you have real estate agents or wholesalers, title companies, maybe some of these people. But if you're looking to take something down bigger or even a residential, you have to put a name to a lot of these pieces. As you start scaling, you can, if you're a wholesaler, for example, maybe instead of saying, hey, I'm going to take my 5K chunk out of this deal, I can go ahead and say, I'm going to forego that and I'll bring you the deal and get a 5% equity stake in your deal. Now that owner thinks about it and may say, yeah, actually, that's a good way of doing it because I'm not taking anything out of the asset per se. So it's a creative way for you to do that and get into the deal and not have to. It's a win-win for both, right? That's where I'm getting at. How can you think about it? And in turn, that wholesaler, they could have got $5,000 or whatever it was for that transaction in 3 or 5 years of that reposition of that asset. And when they go to sell it or refi, that 5%, depending on the size, could be significant, right? It could be 6 figures. You don't know. It could be any size deal. But at the end of the day, that's a way you can strive to get into that certain deal. I see this a lot with real estate agents. The best real estate agents that I meet are thinking this way, right? How can I roll my commission into your deal so that we can help you take it down? Of course, they probably have multiple deals and a lot of deals on the backside where their transactional funding is still happening. But if they could do 1 or 2 every so often to get an equity stake, they're doing really well. So all these people can do that if they provide a certain service, right? So you can be a short sale agent, which they're out there, and provide a value where they don't have to pay out. As you move around, you have asset management with property management. Same thing. Most operators want to vertically integrate, right? They want to provide lower expenses, make sure if you provide property management. And this could be on a smaller scale. If like your buddy or you want to do property management for someone, maybe you have the time. I may not have the time to manage it, but if you do it and you offer to me that you're going to manage it, and then you say, I'm not going to charge you, but instead give me a stake of the ownership. One is it incentivizes me because I know that you're going to have skin in the game and you want to do the best property management possible because it also means more money for you.
Enlightened investors, we'll be right back after this important announcement. I have a big ask that will only take a moment of your time. Ratings and reviews are the lifeblood of our podcast. So to leave a review, iPhone or other Apple iOS device users, go to Apple Podcasts or iTunes. For all you non-Apple device users, go to podchasers.com. On either platform, search for Real Estate Investing Abundance. Once found, please leave a review and a rating. Subscriptions are also vital to our show's success, so please be sure to subscribe on your favorite podcast app. It is free to subscribe, and you can unsubscribe at any time.
So it's a win-win. And on top of that, you know that as well. You lower expenses, you just increase the NOI, and it's going to be worth a lot more. So as we move forward here, there's telecom consultant. There's all kinds of different ways that I put in this little chart. But mainly, if you are an investor, you can be on the funding side. So if you're looking to be a JV partner, maybe you have 100,000, 50,000 in the bank that you want to JV together, right? You want to say, hey, you're getting the deal done. I can bring the remaining piece. Or if you're looking at a smaller scale, you could become the lender. You could become the note writer. You can say, you want to fix and flip? I'll lend it to you. Here's my origination fees. Here's 12 months on my 50K back in this period of time. So you as an individual don't have to just think one way, which is, how do I get on that transaction side? You could be on the funding side. You could help a syndication by investing passively, right? You can. You own homes already. Let's say you own several properties, you own several assets, or maybe you're moving. You could do owner financing, right? If you want to create instant equity, become the bank, right? You can take a $200,000 home and you can sell it for whatever you want. You don't need an appraisal. You don't need anything. If you want to sell that $200,000 home for $230,000, instant $30,000 in equity, and then write the contract agreement. And then in the flip side, when they refi in 5 years or whatever, the pay down versus what they owe you still, you've made money there. And of course, obviously some cash flow. So you as an individual can do certain things to position yourself as any of these ways. Owner financing, you can do it subject to, right? You can have someone take over. Not that advantageous if you're an experienced investor, but you can do a lot of these creative strategies for either a residential asset or a commercial asset and provide value to someone else. On the ownership side, I think that's the easiest one, to be honest. You can be a deal finder, right? You can find deals for people. You can be a sponsor, which I love seeing how high net worth individuals can sponsor a loan and have no recourse against them, because it's just the way the loan is structured. So I know people that are literally running around just signing, and they take a fee of the equity. And I don't think it's a bad thing, because they're providing a value because they have the net worth. If not, we couldn't take down certain things. And then you could be a consultant, right? So that's what we started doing. That's what the case study I am going to show you guys, because we try to show somebody how to structure correctly before you take it to a high net worth people or to our network, because we know what's going to work and what's not, at least within our network. And you could be a capital raiser, you could be an underwriter, asset manager, and all these people are going to get paid by obviously being on that ownership team. And then the main one is really the main one on the ownership team is the limited partners, right? So if you have a syndication or you have a fund, you're going to have those limited partners that maybe want to invest and completely passive, where they're going to get the return, their monthly or quarterly distributions, and they're just going to be happy. But that is, if your audience knows about that, then that's already something that they're aware of. So as you move, the circle on the outside is marketing and lead generation and specialized skill set. So no matter what your profession, what W-2 you have, if you have some kind of specialized skill set, especially in marketing and lead generation, any team, anyone who has a deal is going to see value in that, right? Because it always takes marketing and lead generation to promote a deal, to find a deal, and to find the correct exit strategy. So you need to have that skill set. If you're someone that is social, so I'll give you an example. My brother is a social butterfly in the group. He is amazing at talking and attracting investors. That's where I throw him off. I say, go mingle. So a lot of people think, oh, well, I have no skill set, I can't provide a value. Something as much as your personality being amazing is a skill set and a value. You just have to figure out how you fit into real estate or into anything else you want to do, even in your W-2 job. That may be the difference between you getting a management position and you not getting it. You know how to talk to people. Simple as that, right? So just different ways to see that skill set piece there. And then your network is your net worth, right? As you start understanding the different roles people play, you need to be able to put a name to each one of those. And if you were to print this out right now, and I would say fill this out, how many names could you put to each little title? And I'm sure I'm missing some titles because I don't know everything. A lot of other people know some other niche, maybe positions that should be here. And if you could put them, how much of this could you fit, right? When you have this to the maximum of your ability, that is truly when you're maximizing your potential for any real estate deal. So again, and then the three things I have here is that choosing your asset class, your strategy, and figuring out that funding piece could be anything from your neighbor who has 50,000 in the bank to private equity, to a fund, to a family office, right? These are all people that have different costs of capital. A family office might say, I don't care about growing my money. I just care about conserving my money. Because if you have 500 million to allocate somewhere, they may just be looking at a 3% return, because 3% return on the 500 million is a significant amount of return. So for them, it's conservation of money. So you have to understand your funding and who you're asking to fund. If I'm asking the guy with $50,000, he's probably going to charge me 8 to 10% because they're looking for maximizing their return on that. Realize who you're trying to find and target and figure out where they are and reach out to them. Alan, do you have any questions? Anything I should have hit or?
No, I like your chart, comprehensive and inclusive. Let's just move on to your case study.
All right, sounds good. So moving on into the case study here, and this is the last portion of it. We were brought a deal with 32 unit in Florida. It consisted of 3 buildings, 1.75. The contract was accepted. So they had invested 200,000. This was a couple, and they wanted to, it was brought to us by a realtor connection that we have. And this realtor said, hey, I have a 9 cap in Florida, and I think you guys can help them take it down. And we said, yeah, absolutely. A 9 cap in Florida, that's unheard of right now. Everything's 4 or 5, even 3. It's institutional money is coming in. So they're outbidding guys like me and my brother by like millions. There's no way we can compete. So the deal was brought in, and we started. I said, okay, I'll analyze it. I'll take a look at it. I'm the guy that analyzes the deals when they come in. And I said, hey, there's a couple of things that don't work here. Experience, they only own a few duplexes and they're taking out their 2 unit, which is not a problem per se, but we have to look at the structure. They're looking for funding and capital. They're looking for about 500,000, and they only wanted 3 investors. So meaning they wanted 3 or 4 people to invest 150K plus, and they had invested 70K in earnest money, and they wanted that money back once the capital from investors came in. And I said, okay, it doesn't sound great, but we'll keep going with it, see what's going on here. And as I kept looking, one, they didn't account for, in their projections, they told us a 9% cap, and it really comes in at a 4-5% cap. Everything else are projections. And they did not account for capital expenditures, and their taxes were a little bit off. So immediately right there, I can say to them and say, guys, I don't know how solid your business plan is, because if you're telling me you're going to take it from a 5 to an 8 to a 9, but yet your numbers are not exactly there, I can't tell a sophisticated investor to look at this and take it seriously. So I told them, one, you have to fix that up. And then the other part, they wanted, because I said, you would have to be willing to give up a large portion of your equity, because you're not having any skin in the game. You're taking out all your cash, and then you want the investors to put in the money. So I said, you have to be able to lower your amount of ownership. And they said, no, we want 50% of the ownership. And that's where I drew the line and said, okay, look, guys, I'm looking at your analysis. I'm looking at everything. It's a good deal if you can make the business plan happen. However, you are in a position where you want to retain 50%. You're taking out the money. You only want a few investors. You want to get your earners money back. You have no capital expenditures calculator in, but then you're not willing to go down in ownership. I say, in order to do that, the way we would structure it, and you have to agree to it, is you have to take anywhere from 5 to probably 15% in ownership. And then you have to let all the other partners divide it up however it is. It's a conversation, but you and your team can only take 5 to 15% tops. And 15 is pushing it, because you have no skin in the game. You have no experience, and they're putting all the capital at risk. So I say that because they have to, when you bring something to people, you have to understand from the point of view of the people that put in all the capital, even though you found it.
We'll be right back after a word from our sponsor. As an industry-leading, relationship-focused, design-build construction firm, Mosaic Construction has worked in many different asset classes, from multifamily to retail, medical, industrial, and commercial. Mosaic Construction works to execute interior and exterior renovations with their team of trades and project managers. Their experience with value-add improvements has resulted in increased ROI and long-term value of the assets. They work nationally in partnership with local trades to deliver thoughtful, problem-solving construction management solutions to all their clients. For a personal, no-obligation consultation, call Ira Singer, 773-491-3145, or email Ira at mosaicconstruction.net. You can also find Ira on LinkedIn.
You can just be a deal finder. So it didn't work out for them. They didn't like that. So then we parted ways. We're not going to waste our time. You're not going to waste their time. Know where we truly stand. And then part of that, what we were saying is whatever their equity and ownership was for putting it together and bringing the people that could do it, we were going to charge a 1% fee. So again, we were being brought in just because we have the network and they thought they could take it down. So you can do it from any way. There's a million ways you can get in. So that's what we offered to them. It's not appropriate to think that way. And it's not, no one's taking the deal from you. It's just the way deals are structured. And then these are lessons learned. Don't fall in love with what people bring you. Analyze the number, question everything, and don't try to make a square fit into a circle. And then make your goal and mission always to help. We give advice as to how they can do it. They can wholesale it. They can just, if they can't find the money, eventually they can just sell it to someone else, sell the contract, and let someone else have it. But overall, that is the general presentation of how we talk about structuring and making sure how you fit into the puzzle. Alan, I'll go ahead and hand it over to you. And if you have any specific questions you think your audience would find value.
Thank you, Oscar, for sharing. How do the folks get in touch with you?
Okay. I also put it was the last slide, but that QR code takes you directly to our link tree and has all our information. The fastest way you can reach us is through email, info@GoodDayCapital, our website, gooddaycapital.com, and our Instagram, REI_brothers, and we answer pretty quickly.
Share with us one of your most difficult setbacks in life, and how did you come through that time, and what did you learn from that experience?
I think one of the most difficult was actually the repositioning of our portfolio, to be honest with you, because we were on such a streak, and then we were offered a line of credit of $3 million because we built our relationship with the private equity, and COVID hit. And because COVID hit, they withdrew the line of credit. We couldn't find contractors. We had to extend on our bridge loan that we got short, and we were going to refi. We had to refi set up. And that was really hard because like I said, we were on a streak and everything was great. The contracting piece was just that no one was selling and buying. And because of that, everyone was doing renovations. So it was just a tough time, but we pushed through and we got everything to 100% occupancy and economic occupancy as well. So the lesson there was, hey, push through. I think things will get better. And if you can push through in the hard times, you're going to do amazing in the easy times or in the softer times. It's just pushing through and keeping yourself motivated. Yeah.
When you leave this world, what do you want as your epitaph?
So yeah, this was an interesting question. So when you sent it to me, actually, I don't want one at all. What my goal is, and my wife is that we want to be cremated, mixed together in one little thing, and thrown into the ocean. We want to go back to the earth. So it's funny, we talk about that weird stuff. So when you asked about it, I was like, I've never told anyone that's what we want to do, right? That I want to do that with her. So yeah, no, none of that.
Oscar, I thank you for being on the show, and thank you for sharing your knowledge and expertise. It has definitely been enlightening. Thank you for being on the show.
Thank you, Alan. I appreciate the opportunity. Thank you so much.
Thank you for tuning in to Real Estate Investing Abundance, brought to you by Steve Talker Capital, a company working for passionate professionals like you to develop financial independence built on solid, passive real estate investments. As part of our efforts to make the world a better place, Steve Talker Capital contributes to activities and organizations committed to better understand the equine. These endeavors attempt to enhance the human treatment of horses worldwide. Steve Talker Capital, working for a world where all creatures, great and small, flourish abundantly. For resources to develop your financial independence, connect with us at stevetalker.com.